Let's begin on this hot
Thank
data
you.
that we've seen out of the United States. Market sentiment certainly turning sour here. What's going on, Simon? I thought the US was heading for a recession. The data doesn't seem to suggest that, at least for now.
Well, at least for now, but if you look at the data, it's certainly mixed. And I think the problem is if you go back into last year, then the market was underestimating quite how sticky inflation was going to be. Now the market is perhaps underestimating the extent to which the Fed is aggressively going to chase that elevated, sticky level of inflation. But as you say, the big question about is that recession risk, how far they can stretch the elastic band before it potentially breaks. And the latest PPI numbers, as you say, the jobless claims numbers have all suggested that there's upside risk to the rates outlook. But look a little bit deeper. Look at the ISM. Look at the Richmond Fed Manufacturing Index that came out last month. Both of those sub 50, looking very weak. It's a very, very fine sort of balancing act that the Fed is now playing with.
So speaking of balancing act, now that we've seen payrolls, PPI, CPI, retail sales all shooting the lights out, do you think that we will see a 50 basis point hike from the Fed at its next meeting, as Bullard and Mester are now suggesting?
Okay, so Ballard and Mester, make a very sort of compelling argument, I guess. But the key issue there is, they're not voting members of the FOMC this year, so you can dismiss that to a certain extent. But they're part of the debate. I think having set the benchmark of 25, or having sort of reduced to the benchmark 25 basis points in the last meeting, then perhaps they've set the tone for this coming meeting. I think given the backdrop of mixed data, albeit that still sticky inflation, 25 basis points is the way to go. And at the end of the day, inflationary pressures are more supply side driven rather than demand side driven, and the interest rate monetary policy tightening is addressing the demand side of the equation rather than the supply side. So in actual fact, going by 50 from 25 at the next meeting probably will have little negative impact other than raising that risk of recession that you alluded to earlier.